Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Thursday, the 17th of November. I'm Daniel Lam, your host for the podcast. I realize that we've been focusing entirely on Asia or China assets in the podcast this week. But Cut to the Chase is about helping you to manage your portfolio, which I'm sure does not just consist entirely of EM assets. So today, I would like to switch gear and discuss about US equities. The key driver is still US inflation. Now, the latest CPI print is below expectations, and the PPI earlier this week also showed signs of slowing down. The Fed, however, is likely to continue its hawkish tone until they see a couple more such prints for them to consider, quote-unquote, pivoting. Nonetheless, such figures did provide relief to risky assets. But in terms of fund flow, the more direct factor comes from the US dollar. Now, the DXY index was at nearly 115 only 2 months ago, but it is now testing key support near 104.60. Actually, the DXY index has been falling before the latest US CPI print came out. It has a lot to do with expectations of further reopening in China and how this can help economic growth in the rest of the world versus the US. So now this is the real key point to remember in this podcast, i.e., the US is not doing badly. But it is likely that the quote-unquote safe haven demand in US equities would be transforming into quote-unquote risk-seeking demand in equities in the rest of the world. Hence, it was no surprise that over the past few weeks, we have been witnessing the largest outperformance of EM equities over equities for the rest of the world since 2009. US equities remains our core holding. S&P 500 has good support around the 3,600 level. It has been making bullish higher highs and high lows pattern since the middle of October, but it faces resistance around the 4,100 level. But on a relative basis, it is likely to underperform Asia ex-Japan equities, which is our preferred region. Like we discussed in the podcast this week, a few key factors in China are showing signs of improvement. So they include potential further reopening, prospects of more constructive dialogue between the US and China, as well as backstop on the Chinese property sector. That's all from me today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.